All right. Good morning, everybody. So everybody had been talking about the OPEX as the pivot point for the market, that everything else will come after this OPEX because it was so large and the rails that were being removed had been in place building up for quite a while, keeping us in that protected mode. So now we're going to get a glimpse of what it's like without them. Building up into that, we're continuing to get more and more information about how strong it was, where the flows were, in which direction the money was allocated. This morning we got Nasdaq and S&P down around 0.25%, with the Dow small caps down the least, but still down. And then China up 0.25%, with Japan hanging out around the small caps area. A lot of Fed speakers now that we're done with FOMC in the blackout period. They've all got to get out there and chip some teeth. Not really expecting anything out of them. They're just supposed to toe the party line and get the message across. We'll see if we get any standout, but really not expecting it. This is way too late in the day for it to have any real consequence. Yeah, fireside chat. So it shows it as a high impact event, but I wouldn't get too hung up on that one. Still, we don't want to discount it. Keep your eye on it. Most of the time in a situation like this, it's unless it's got Q&A, it's not really much of a risk, or depending on what the backdrop is. Like if they're having lunch at the Girl Scouts, then it's very likely not much of a threat. A couple of auctions in the front end, probably just use the IRX and keep track of it that way. All right, 63,000 in the overnight. Last week we mostly ran in the 50s, so it's a little bit higher, but still it's in normal range. It just shows uh, a considerable amount of participation. We are inside day, nicely nestled inside of Friday's price action. So these kind of setups are nice because it's just real simple GTFO kind of stuff, right? Get out of the box. So we are resting on the 4 period. The call and the put wall both moved slightly. There wasn't much to it, but they both did move. The put wall is so far away that it would need to move significantly to become a player. We're still well above the 0 gamma line. If we're looking for any changes out of the dealers, we're a long ways off from seeing it. Comfortable above the 10. No risk in sight. We're not too far away, and we're just kind of holding out. Between Wednesday, Thursday, and Friday, we've developed that higher high, and it hasn't stopped yet. So That's what we are wanting to focus on now. So we got the white line over here. It's this white line right here. Higher high, higher low. We need to resolve this issue. So until price gets out of this, we can just stay up here and it won't be bearish. It won't be bullish. It'll just be a topping pattern. We could run up and set a higher high first. Nothing says that we have to set this low, whether it's a higher low or a lower low. Nothing says we have to set a low first. But since it's already red, we're looking to see what yesterday's price does and then Thursday's price. Breaking through each one of those gets us to the 10. Get through the 10 to challenge the low of last week. There's also a gap fill down here. So if we break that low from here, getting down to that gap is the next target, which is basically the 20 period moving average. Level by level. We don't have to go all the way down to the 20 though. We just need to put in a higher low than this, or if we're looking for weakness, a lower low than this. If we don't do that, we could get what they call a complex topping pattern. That's where we would start to pull back and we set a higher low. So then we start to run up, but we end up setting a lower high. Then we, head back down, come back up, maybe set another lower high, and then maybe eventually break that low or not, right? So we might not get a clear decision or a clear answer out of this for a while because it doesn't owe us anything. At this point, we're just inside day from Friday. We're inside a week from last week. We got to get outside the box if we're going to do anything else. And we don't have any reason to believe it's going to sell off, break out, or do anything at this point. Seasonality says it should be coming into weakness. But seasonality is nothing more than a guide, giving you clues of what's happened in the past, not a precursor for what's going to happen next. We are closer to the lower ADR, which implies we'll just go on down there and hit it. 66.87. That ADR is sitting exactly at yesterday's RTH low. And that's a nice place to look for a reversal. Of course, I'd still use the 111 or the 1236, and that lines us up with the Globex low or all of yesterday's low. Without data, we very likely just sit inside the ADR range, challenge the edges, maybe expand outside of it a little bit, come back in again, hold the line, and have a reason, look for a reason to make a move. The current ADR is 0.86. So really no volatility. Very small daily moves. We're underneath that floor pivot. We've checked it from below like a Busby. Now we're hanging out below that, but we're still above the weekly pivot. The weekly pivot considerable distance away from the previous week's pivot. The channel today is a little wide. A wide channel implies if we break out, it doesn't stick. And on the weekly, it's really wide, implying that this week shouldn't be a breakout and run week. Just keep in mind, these channels don't make price do anything. If we continue to fade, we've got the weekly pivot below us, 66.87. Get through that, and then Friday's low, and then we got the lower edge of the weekly channel, which lines up really nice with Thursday's low. S1, 66.90, and R1, 67.41. So that's our playground today. Not expecting more than that unless we get some shock and awe, right? The economic data that we have on the table, not big enough to get us out of this box. But if we get some unknown headline just come in and, kick the market into gear, yeah, sure, we could run. All right, so last week's distribution did end up being two distributions. So we got the big one with the point of control, 66.70-ish. That's like the Thursday low area. Then we've got the one where we are right now. We're resting in it. So it gets shallow. Shallow areas is where we tend to move through the zone relatively easy. We could drop through this 66.90 down into 66.70 relatively easy. So if we get a new Globex low, then that's a lot more likely to happen. But we came through there on Friday, and we found some support in the middle of it. We didn't have to get all the way back down to the point of control. So maybe that can happen again. Either way, it is a shallow area. And looking at the way that the point of control have been brought up, you can see how we were holding in a zone here, these 4 point of control. That structure's still down there, that 65.20 area, 65.50. So if we break 66.50, we're going to 65.50. That's just, we're running 50s. I've been saying it for a while now. That's what we want to continue to do. But we have to break it. And we brought the new zone up. It wouldn't surprise me if we put in a third week here where we've just got new points of control around this 66.50 area. Either way, we do have a lot of structure at 65.50. And we need to get through that to really start to consider that we're getting bearish in the market. That's basically the 20 period moving average. And that lines up with the way a lot of analysts play the game anyways. That if we're still above the 20, then, we don't have a bigger, longer term play for shorts. Short-term shorts should probably still work. Ten-day, 30-minute volume profile in TPO. This thing is a mess. There's no shape here. The best that it offers is that the point of control is underneath us, and it's at that 66.70, which is basically Thursday's low. And that's about all we get out of it. There's no correlation between the TPO and the volume profile with their points of control. Even the value areas are in different spots. nothing lines up here, and there's no shape, there's no pattern. We are taking the volume off of these candles in the lower section, and unless we break this 6607, then it's very likely over the course of the week that we're going to narrow things up and that this will be our new range by Friday. Of course, the value area itself will start to tighten up. This lower line will be up here somewhere, and this upper line will likely be down here somewhere. It will shift as we move. For each new candle we get on the right, we're taking one away from the left. So we're going to work through these candles. It's Monday, so we're just doing our thing. I think the zone is pretty clear from, the aftermath of Wednesday, FOMC into Thursday, and then we just stayed there through Thursday into Friday, and now here we are this morning. GTFO, right? We got to get out of this range. Got a really nice double distribution forming. Point of control aren't lining up on either one of these, but yeah, it looks really good. You can see the defense when they came in and tried to defend this low here. It's nice. But we got nothing, right? No VPOC from yesterday, so nothing to carry forward. We're still inside day, and it's now IX10. Just got to do the thing. All right, so as we talked about last week, sometimes the indicator does something funny when it comes to the weekly expected moves and OPEX. It has now remade our week. Last week, it wasn't like this, right? It was a normal week, but now it looks like that. But we still had the box drawn. The box was in a different shape. I already had to move it up, but the size of the box that we drew last week is still the size of the range that we have for this week. If we can compare that to previous weeks that we've had lately, you can see that the week that we're in right now has considerably more volatility to it than almost any of the weeks that we just measured. This week is bigger. That was the first week of August, but other than that, it's been a while since we've had this much volatility getting priced into the market. If it was a big event and if everybody was worried about it, then it would have been a narrower week. And the idea behind that is big events are volatility suppressing, like FOMC, CPI, PPI, non-farm payrolls. Those suppress volatility. People expect the market to go sideways into those events, and then they price their options accordingly, and then that narrows our weekly range. But our range is bigger. So either they're pricing in volatility because they're having an expectation of a big move, but they don't know why. It's not connected to a particular event per se. Or this is the norm, and we've just seen the ranges compressed for the last 5-6 weeks, whatever that was, because those weeks have had constant threat of volatility, and this week doesn't. So it's kind of an either or situation there. I don't have a leaning towards one way or the other. And my base case argument is that the market is nervous, but they didn't have anything to particularly put their finger on. And so a lot of people were hedged up or, getting short trades on just for GP. We mentioned last week myself that it's probably a good time to grab some butterflies on the downside, just really cheap, low risk trades. Because why not? If we were to drop down, then they'd pay out nice. So my base case on this is that this volatility is pricing in a lot of people saying, yeah, it's probably time for a pullback. And they were hedged up and getting some shorts on without any real signals of a need for shorts. That's my 2 cents on this. We'll find out later as the week goes on, that's for sure. We're still more than 0.5% above the 10-day, and that's a good, healthy place to be. This is not bearish. It's not negative. It's not even giving us signals of negativity. This is exactly where you'd want to be in a good, clean, healthy market. We're above the 10, but we're not overextended, and it doesn't owe us any sort of mean reversion or pullback. Looking at the weekly, we're less than 3% away from the 10-week moving average. And that, again, that's just a really good place to be. We're not overbought. We're not overextended. We didn't move too fast. And this is just a good, healthy market backdrop. Nothing wrong here. No reason for a short other than, wow, it's been such a big move since the April lows. And we had all that notional value removed from the board. That's really it, right? There's some macro stuff, but all year there's been a lot of bricks in that wall of worry all year. And they've been beating the drum on those walls of worry because, well, they need people to short it so that they can run you over, right? They need people to sell so that they can buy. And they've been playing on those fears all year long while it just ran higher and higher and higher and higher and higher. So far, nothing's changed. And looking at things that are down this morning, Bitcoin, more Bitcoin, nat gas, China, the Mag 7 up volume is down. Yeah, I know. Let that run around in your head for a little bit. XLF financials, industrials, tech, uranium needs to get up there a little more. Looking for 0.5%, and uranium's just not there. Some of these that are really close, we can call it. It might be at 47, but it's close to 50. Uranium's not close enough. It needs more. We've got the Mag 7 down with China, but they're not down enough, so they really need to move the needle there. But they're weak and not positive this morning. Looking at things that are up, we've got precious metals and miners of metals, right? GDXJ, GDX miners, junior miners, and the Mag 7 down volume is elevated. And uranium, which is weird because the other uranium was down. This one's up. So we got nothing. If we were looking for a rally day, I would not want a rally day based on precious metals and metal miners. All right, let me get logged in. I got logged out of TrendSpider. Fine. Gonna be like that this morning. All right, we'll just leave it alone then. I'll deal with it later. I need to do multiple verification. Are you? Don't you love it when it does that? So breadth, names in the S&P that are down or that are up 0.5% or more, 4. That's not enough for a rally day, not even close. For the NASDAQ, it's 7. And we can see that some of them is Mag 7 names like Apple and Tesla, but still not enough by itself to drag the broader market. Now, if we look at the negative side, how many names in the NASDAQ are down at least 0.5% or more? 22. A lot of packaged software, semiconductors, that's really going to hit the market. If we're looking for a rally day, we can't rally with that sort of drag on the market. We would need these to turn around, or at the bare minimum, just go flat and quit falling. And for the S&P, 20% of the S&P is down this morning if we're looking at the S&P 100. Major banks, technology services, those are the very sectors that we need if we're looking for a rally day. We would be looking for tech, finance, and that's exactly what's down the most in the S&P. So can't see a rally day with those as the backdrop bringing in that weakness. Now, it can still happen, but you'd want to look at things like 0-day flows, which we can't see right now, and or big headline news as a shock and awe. Now, we got known unknowns. Those are events like non-farm payrolls or PPI. We can see them coming. We just don't know what the data is going to be. That's a known unknown. But at this point, if something hits us today, it would be an unknown unknown because nothing's on the table and, we're not expecting anything. So if news hits of that caliber, then it could change the ball game. But otherwise, we got nothing for a long and a lot of tells for short. The thing is, even with this weakness for short, there's no signal to actually get a short yet. Just this is more saying don't look long than saying you should look short. And that's a big distinction. So at this point, we got nothing. So I got for you guys, be careful, be safe. Remember, GTFO, get out of the box. If we don't get out of the box, we're just IX10. There's nothing to play. We're just sitting inside of yesterday's range and the day before that.